welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, the markets have seen a pretty weakish close given the fact that it was a weekly expiry. So we've shut shop below that 18,500 mark, and the Sensex has seen a cut of somewhere around 200 points or thereabouts. But what's heartening is the fact that the broader markets have held out, given the fact that the mid-cap index has closed with somewhere around 0.2% gains or thereabouts, and the small-cap index is up again by 1% or so for a second straight session. It has outperformed the benchmarks, and if you look at the advanced decline ratio, I think it was fairly in favor of the advances. In fact, if you look at some of the losers, Coal India was one of the top losers on the index, given the fact that the government is looking to sell up to 3% stake in the counter. The OFS has kicked off today, and the stock was down somewhere around 4.5% in today's session. Both the counters like Kotak Bank and Bharti Airtel, which saw last hour volatility, in fact gains yesterday on the back of MSCI rejig, have both ended in the red today and deep in the red, given the fact that Kotak Bank was down 4% and Bharti Airtel was down nearly 2.5%. Even though there was a positive report coming in from CLSA, the stock came under a fair bit of profit booking. Aside of that, you have the life insurance stocks like SBI Life and HDFC Life. Those two stocks were some of the top losers on the index. If you look at the gainers, you had the likes of Apollo Hospitals. It rallied somewhere around 4%. Divi's Lab, even that stock up about 2.5%. Tata Motors, even yesterday it was up among the top nifty gainers. Today as well, up somewhere around 2% or thereabouts. Bajaj Auto on the back of strong sales, and Asian Paints was the other one that gained on the Nifty index. Well, Yatin, let's talk about some of the movers in the mid-cap end of the markets.
Nandita, today there were specific stocks which were moving on the back of news flows, and if you look at the mid-cap index, clearly at record highs. We had EPL, which is SL Propack. That stock moved up nearly 10% in trade. We had Westlife Development, which is the McDonald's franchisee in India. That stock was up 7%. We also had Sobha Developers and PNB Housing making a move in the markets. But what was not doing well was Suzlon. After the 14% move yesterday, the stock has cooled off, 5% lower for that stock. We also had Aegis Chemicals, ABB and Anupam Rasayan. These are the stocks typically which have went down post the earnings. So, yes, stock specific action coming in there. We had the Adani Group stocks which were doing well. In fact, Adani Total Gas and Adani Transmission, both of these stocks moved 5% higher today after MSCI had deleted the stocks yesterday. So, post the MSCI selling, today we saw about of buying coming in these two stocks specifically.
Right. On that note, let's take a look at the stocks that are on our radar this afternoon. Let me start with Bajaj Auto. Now, this stock hit a fresh 52-week high. In fact, the stock is up somewhere around 30% on a YTD basis. If you look at the May sales, it was pretty strong, 29% uptake on a YY basis. But domestic sales have literally doubled compared to last year, but that's because of the low base. It was a third straight month of improvement when it comes to sales for Bajaj Auto. Let's talk about exports. That's one pain point for these two-wheeler makers, and which is why brokerages are pretty divided on Bajaj Auto when it came out with its numbers. The operating margins for Bajaj Auto were at a 9-quarter high. But despite that, the street was mixed. Some of the brokerages said that the pain on exports will take some time to wane off, which is why some of them were not very upbeat on the stock. But the stock has been doing fairly well. In fact, if you look at the price to earnings ratio, it's at 21.7, lower than its sector PE of somewhere around 40.5. So that valuation comfort is there, and return on equity has been northwards of 20%. So that's also a good thing going for this stock. But if you look at the holding pattern, FIIs have increased, but domestic mutual funds had decreased their holding on this stock. But given the fact that the company has seen a second month of improvement when it comes to exports, looks like the road ahead will be a little more smoother than what brokerages were saying earlier.
Absolutely, and this is one stock to watch out for. Good management commentary with respect to the domestic market as well. But all eyes on City Union Bank. Ever since we saw the extension of the previous MD and CEO by RBI, which is Mr. Kamakodi, the tenure was increased by 3 years. We had the stock which rallied, but the rally fizzled out post the quarterly earnings because there was some issue with respect to the overall outlook. Today we had Macquarie, which has downgraded City Union Bank to neutral rating. Target has been cut sharply to 140 from 175 rupees per share. Now, if you look at Macquarie's thesis for downgrading City Union Bank is the kind of margin pressure which the bank could face moving ahead. In fact, they do expect a sustainable ROA, which is return on assets, to reduce by nearly 10 basis points on the back of reduced growth and lower margin, which is the net interest margin. Now, they do expect City Union Bank to underperform the peer set, which is basically the private sector banking space, despite the fact that the recoveries could be healthy ahead. So, City Union Bank, on the back of Macquarie downgrade, was languishing in trade.
Yeah, Yatin, and on a year-to-date basis also City Union Bank is down somewhere around 30% or thereabouts, so clearly underperformed its peers, right? Well, the second stock on my list is Bharti Airtel. Now, this stock was among the top losers on the index today despite a bullish report coming in from CLSA. Now, CLSA has a buy rating on the stock with a target price of 1,015 rupees a share. Let's talk about the MSCI rejig first.
Yes.
Yesterday we saw the stock rallying in the last hour of trade despite the fact that MSCI has reduced its weight by 0.7%. As per Nuvama, that is. But brokerages in the recent past liked the stock because at least 3 brokerages have come out with a target price of over 1,000 rupees for the next 12 months. So, the street is fairly upbeat on this counter given the fact that it has seen a very strong addition in postpaid subscriber base. And that's something that, brokerages believe will add to the share price. If you look at, the jump in postpaid subscribers, that has happened because of its focus on ramping up 5G services, and that is something that will bode well going forward and lead to more subscriber additions. CLSA also says that the in fact, subscriber growth has happened despite the tariffs being 33% higher compared to Jio. Yes. So, that's something which is a positive, which the street is taking heart from, even though today the stock came under a fair bit of profit booking. Now, if you look at the valuations at 8 times FY24 EV to EBITDA, Bharti Airtel shares are trading in line with its 5-year average. So, there is some comfort when it comes to valuations as well. In fact, last month itself, Macquarie had also come out with the coverage on Bharti Airtel with an outperform rating and a target price of above 1,000 rupees per share. Domestic mutual funds have increased their stake in the counter, but foreign investors have pared their stake in the last quarter. All in all, because of its 5G ramp-up plans, things are looking good for Bharti going forward, and we'll have to see whether, the brokerages which are upbeat on the stock and have given a target price of 1,000 rupees per share, whether that prediction comes true or not.
Absolutely, and Bharti is one telecom stock which has been favorite of the street. Given the fact that the PP shares have also done really very well in the past. Bharti PP, meaning Bharti partly paid up shares, recently got listed after the rights issue, and they are also outperforming the ordinary shares. But let's move on to Apollo Hospitals, which is the next stock on my radar. Jefferies has a buy rating on this one with a target of 5,300. Now, post the result, we saw some profit taking after there was slight margin miss for Apollo Hospitals, but post the conference call and the management commentary, the stock rallied in trade today. In fact, the stock was up as high as 4% intraday last time I checked. And if you look at Apollo Hospitals, the quarterly numbers were slightly weaker because of lower occupancies and other operational issues. But if you look at the outlook, that remains strong. In fact, the management is expecting the hospital occupancy rate to increase to 70% in Q4 FY24, which is basically in the next 6 to 9 months. Also, in the healthco, they have guided for a break even in the next 2 to 3 quarters. So, the management commentary has been decent. Rising occupancy rate would mean that the margin recovery or the margin improvement should be catching up steam in the second half of this financial year. And on the back of that good outlook, we had the shares which were doing really very well in trade today.
Right, Yatin. Even on a YTD basis, this stock is up somewhere around 8 to 9% or thereabouts. We'll have to see how, the commentary that has come in on Apollo 24/7 breaking even, whether that happens or not. Well, with that, we've come to the end of this edition of Closing Bell. Thanks a lot for watching, but stay tuned to Moneycontrol for all your other news and updates. I'll be back with the markets at 8:30 a.m. tomorrow.